Hi everyone, in this video we're going to look at how Bricks for SA Limited orders, receives and pays for their supplies, which is better known as the acquisitions or purchases and payment cycle. This cycle is all about how the business orders, receives and pays for goods or services from suppliers. Goods can include, for example, raw materials, equipment and supplies, while services can include, for example, cleaning services and waste disposal services. The acquisitions and payment cycle consists of the following steps: order goods and services, receive goods and services, record purchase, prepare payment, actual payment, and record payment. Please note that all the documentation used in the cycle should be pre-numbered with a unique number which is generated by the accounting system. This serves as a control to protect the company against fraud and to prevent missing documentation. Let's take a look at how the cycle works within the business. We find ourselves in the procurement department within Bricks for SA Limited, which is responsible for the first step in the cycle, ordering goods and services. Before we look at the actual step of ordering goods and services, we need to discuss some important information to help you better understand certain concepts. If any department within the company requires goods or services, they have to send a requisition, which is a request for a purchase, to the procurement department in order to communicate this to them. Procurement is a centralized function, which means that it deals with all the purchases in the business. The company only orders goods and services from approved suppliers. Procurement investigates any suppliers who want to supply goods or services to Bricks for SA Limited. If the supplier meets the requirements set by the company in terms of reliability of delivery, quality and price of product, they will be added to the list of approved suppliers. All the approved suppliers' details will be on the supplier's master file, which includes information like tax details, physical address, bank details, and contact details. Access to change or add anything in the supplier's master file is restricted. The supplier's master file serves as a control to, amongst others, prevent employees from using unapproved suppliers. The restricted access to the file serves as a control to prevent unauthorized suppliers from being uploaded on the system and to prevent changes to, for example, bank details. In this step, there is a chance that employees may commit fraud. This means that they will try to benefit from the business in an illegal or unfair way by cheating or tricking. Let's look at two examples of fraud. The following is an example of fraud involving manipulation. An employee in the procurement department steals his manager's password to the supplier's master file. He creates a fake supplier and adds his own banking details as the fake supplier's banking details. The employee orders goods and creates a fake delivery note. The payment for the goods are made into the employee's personal bank account, therefore defrauding the company. Another type of fraud involves tenders. A tender is an offer to carry out work and/or supply materials at a stated fixed price. A tender process has specific criteria which suppliers are subjected to. The supplier who best complies with the criteria will be selected. The following is an example of tender fraud. A manager within procurement has an uncle with a cement business. The manager does not follow the company's tender policies and procedures and awards the tender of cement supplier to his uncle without considering other tenders. The preventative measure or control which should be used to prevent fraud, as described in the two examples, is segregation of duties. This means that a minimum of 2 people are required to complete a task. Now it's time to find out how to order goods and services in Bricks for SA Limited. Sandile is an inventory controller in the manufacturing department. He has just noticed that the sand and cement quantities have reached the reorder levels. Sandile completes a pre-numbered requisition with the details of the quantity, type of inventory, and delivery requirements. He then sends the requisition to Brenda, the inventory manager, to sign off. After Brenda has checked that the requisition is accurate, she signs it and sends the requisition to the procurement department. She also saves a copy of the requisition for reference purposes. The requisitions received by procurement are sent to the buyers in the department. One of the buyers, Cindy, receives the requisition from Brenda, the inventory manager from manufacturing. She sees that she needs to purchase sand and cement and therefore selects a supplier, General Building Supplies, from the approved suppliers list. Cindy phones General Building Supplies to check the availability and prices of the sand and cement required, as well as the descriptions and codes. After confirming that the inventory is available, Cindy completes a pre-numbered purchase order. This shows the detail and price of the goods to be purchased and is addressed to General Building Supplies. Cindy sends this document to David, the purchasing manager. David checks and signs off on the purchase order, indicating that all is in order. For example, General Building Supplies is an approved supplier and the quantities and description match the requisition. David then sends the signed off purchase order back to Cindy. She sends the original signed purchase order to General Building Supplies. She also sends copies of the purchase order to the following departments: Finance, the receiving section of the warehouse, and the manufacturing department who requested the purchase. Cindy also files a copy of the purchase order for reference purposes. Do you remember what an objective, a risk, and a control is? Let's refresh your memory. An objective is something that you want to achieve. A risk is something that can go wrong and prevent you from achieving your objective. And a control is an action that you take to prevent a risk from happening. Now we'll look at a few examples of objectives, risks, and controls found in this step. Some of the objectives for ordering goods and services are to get the best quality products at the best price, only order required goods and services for the business, and ensure that only valid orders are placed with approved suppliers. Therefore, no fake orders should be allowed. Some of the risks for this step include buyers ordering goods from suppliers who do not provide the best prices and quality because the buyers are offered kickbacks or commissions by these suppliers. This leads to Bricks for SA Limited paying too much for goods or receiving goods of inferior quality and employees benefiting from this unfairly. Buyers placing orders for the incorrect products or quantities which lead to losses in the business, and buyers placing orders with fake suppliers and receiving payment into their personal bank accounts for goods which were never delivered. This leads to the business losing money. Some of the controls include implementing a formal procurement policy which ensures transparent procurement of goods and services, ensuring approved requisitions signed off by the relevant managers accompany every order, using only approved suppliers, and restricting access to the supplier's master file to prevent employees from making unauthorized changes. Remember, these are a few examples, but there are many more objectives, risks, and controls that apply here. Can you identify anything else that can go wrong during this step? Which control would you use for this risk? Let's discuss the next step, which is receiving goods and services. Although the manufacturing department placed the order for the sand and cement, all company inventory is delivered to the receiving section of the warehouse. This is why it was necessary for Cindy, the buyer, to send a copy of the authorized purchase order to the receiving section of the warehouse. The receiving sections are access controlled, and only authorized personnel are allowed access to this section of the warehouse. Moses from General Building Supplies delivers the sand and cement to the receiving section of the warehouse. He provides Joe, the receiving clerk, with a supplier's delivery note which details the goods being supplied. Joe checks the purchase order reference against the General Building Supplies delivery note to identify the correct purchase order. Joe then checks the goods indicated on the delivery note and compares it to his copy of the purchase order. He also counts the goods delivered against the delivery note and the purchase order to ensure everything is there. Joe then does a quality check, which includes checking that none of the containers are damaged or wet. He finds that 2 of the bags of cement are damaged and therefore rejects these 2 bags. He indicates this on the General Building Supplies delivery note. These changes to the delivery note are signed by himself as well as Moses. The company will not pay General Building Supplies for goods delivered without Joe's signature on the delivery note. This is to ensure that Bricks for SA Limited only pays for actual goods received. Joe makes out a pre-numbered goods received note or GRN for the goods actually received. He makes copies of the GRN and delivery notes. Joe then gives the original GRN and delivery note to Moses to take back to General Building Supplies. Joe sends the copies of the GRN as well as the copies of the General Building Supplies delivery note to the Finance Department for further processing. 1 copy of the GRN and General Building Supplies delivery note is kept on file in the Warehouse Department to update the warehouse records. The goods are transferred from the receiving bay of the warehouse to the raw material store, which is responsible for keeping the goods until needed for production. We will discuss this as part of the inventory and production cycle. It's now time to discuss some of the objectives, risks, and controls for receiving goods and services. Examples of objectives for this step are to ensure that the company receives what it pays for. Ensure that the company only accepts deliveries of goods or services actually requested by the business. Ensure that delivered goods are of the correct quality and not damaged, and ensure that inventory is protected. Some of the risks you will find in this step include the following: committing fraud, specifically misappropriation of assets. This could happen as a result of an agreement between the supplier's delivery employees and the receiving clerk. For example, the receiving clerk signs for the correct order but only accepts half of the order and sells the other half for personal gain, sharing the money with the supplier's delivery employees. Another risk includes acceptance of damaged items, as well as acceptance of a short delivery or the wrong goods, and theft of inventory received. A few examples of controls to implement to try and prevent these risks from happening include segregation of duties between the receiving clerk and the inventory controller, making the receiving clerk responsible for checking the quality and quantity of the goods received against the purchase order and the supplier's delivery note, and placing surveillance cameras in the receiving section of the warehouse. These are only a few examples. There are many more objectives, risks, and controls that apply here. Can you identify anything else that can go wrong in this step? Which controls would you suggest for these risks? For the next step, recording the purchase, we are back in the procurement department. When Thandeka, an accountant for Bricks for SA Limited, receives the invoice and other related documents from Cindy, she will match the invoice to the purchase order and GRN. The invoice contains information on what goods are being charged for, the price of the goods, any discounts, as well as the value-added tax or VAT on the purchase. She also inspects these documents for signatures of employees who perform control procedures, for example, the purchasing manager. Thandeka then checks the invoice against the prices quoted by General Building Supplies and also checks for accuracy of costs or the calculations on the invoice, extensions, discounts, and VAT. In an automated environment, the accounting system will automatically do the three-way match, which consists of checking the purchase order against the GRN and invoice. All the documents are accurate, therefore Thandeka captures the transaction on the accounting system. For example, if the goods cost 100 Rand, and there are no VAT implications, the inventory is debited with 100 Rand and the creditor is credited with 100 Rand. This automatically enters the purchase into the purchase journal and allocates the correct account to be posted to the general ledger and the creditor's ledger. Creditors' reconciliations are performed on a regular basis by Mark, who is the creditor's clerk. He is independent from the procurement process and from Thandeka. This ensures that the posting was done correctly and to the relevant account. This is a detective control. Can you think of objectives, risks, and controls for this step? Let's take a look at some examples. Objectives can include ensuring that suppliers do not overcharge the business and that the accounting records are accurate and complete. Possible risks could include the following: recording of incorrect prices for goods purchased due to the prices differing from the quotes received. The business is therefore overcharged. Recording of purchases for goods not ordered or received, resulting in the inventory and payables being misstated. And capturing invoices incorrectly, resulting in the inventory and payables balances being misstated. Some of the controls the business can implement include performing a three-way match between the purchase order, GRN, and invoice to ensure accurate accounting of goods received, and performing monthly creditors reconciliations between creditor's statement and creditor's ledger. In the prepare payment step of this cycle, General Building Supplies sends a creditor's statement to the finance department once a month at the end of the month. The creditor statement shows the following: balance owing at the beginning of the month, which is how much money Bricks 4 SA Limited owes the supplier at the beginning of that month. Invoices issued. Payments received. Adjusting entries, for example credit notes for goods returned, which shows credits to Bricks 4 SA Limited's account. And balance owing at the end of the month. This balance is broken down into the periods for which it has been outstanding, for example 30 or 60 days. Mark, the creditor's clerk, compares the following documents with one another to check for accuracy or to reconcile: creditor's statement received, supporting documentation, purchase order, supplier's delivery note, goods received note and invoice, and creditor's account in the creditor's ledger. The receiving of cash in the revenue and receipt cycle and making payments in the acquisitions and payment cycle make up the bank and cash cycle. Terence, who is the bank and cash clerk, prepares a payment schedule showing all the payments that should be made to suppliers. This is based on the information prepared by Mark after performing the creditor's reconciliations. Susan, the financial manager, reviews the payment schedule and checks each payment against the supporting documentation. She then marks all supporting documentation as paid. After Susan's review and sign-off of the payment schedule, Terence uploads the payment schedule for the payment run on the online banking system. Your textbook refers to payments made by checks. However, in modern society, this has been replaced by EFT. This limits the risk of fraudulent payment due to theft of blank checks. It's time to again look at some examples of objectives, risks, and controls. Before we continue, have you identified anything that could go wrong in this step? How would you deal with these risks? Objectives for this step could include ensuring that suppliers are paid the correct amounts owed for actual goods received, as well as ensuring that suppliers are paid on time. Some of the risks that might take place include payments of incorrect or fake amounts and/or suppliers, leading to the business losing money. Discounts lost due to late payments or interest being charged, leading to the business losing money. The controls to implement for the risks mentioned include: the financial manager should review and approve the preparation of the payment schedule, And the creditors clerk should identify the creditors who have to be paid at month end to comply with the supplier's credit terms and receive discount for early payment. For the actual payment of accounts, two senior managers, Lungi and Richard, log on to the online banking system, each with a unique username and password. They ensure that the payment run has been uploaded accurately by comparing it to the signed-off payment schedule. Once satisfied that the upload is accurate and complete, the two signatories release the EFT payment. Let's take a look at some examples of objectives, risks, and controls for this step. One of the objectives for this step is to present a valid, accurate, and authorized payment. Some of the risks the business may experience include paying the wrong supplier or the wrong amount being paid, which leads to the business losing money, and payments made to fictitious suppliers or payments made for goods and services which were not received, leading to loss of money for the business. The controls for the risks identified include a segregation of duties, which means that a different person approves and releases the EFT than the person who loads it. And authorization and release of EFTs lies with two senior financial managers. Only these two financial managers should have access to the business online banking system. These are only a few examples of objectives, risks, and controls. There are many more that apply here. Can you identify anything else that can go wrong in this step? Which controls would you suggest for these risks? Terence, the bank and cash clerk we dealt with earlier, captures the transaction on the accounting system. For example, if the goods cost 100 Rand and there are no VAT implications, the creditor is debited with 100 Rand and the bank is credited with 100 Rand. This automatically records the payment in the general ledger once the payment has been approved by the two authorized signatories. This is the last step in the acquisitions and payment cycle. Please note, the bank reconciliation process at month end is the detective control to identify any differences between the official bank statement and the cash book, also known as the cash receipts and cash payments journal. Let's discuss some examples of objectives, risks, and controls for this step. An objective could include to ensure the accounting records are accurate and complete. The risks here include payments recorded inaccurately in the financial records or payments which are intentionally misstated to hide fraud. The controls to implement in order to prevent these risks from happening could include monthly bank reconciliations. These are performed by the bank reconciliation clerk, who is independent from the person preparing the payment schedule. There are many more objectives, risks, and controls that apply in this step. Can you identify anything else that can go wrong? Which controls would you suggest for these risks? In conclusion, one of the main parts of this cycle is payments for goods and services. It is therefore very important for the business to identify risks to prevent these payments from falling into the wrong hands due to fraud or errors. The stronger the controls, the less likely it is that errors or fraud will take place, therefore preventing the business from losing money.
Hi there. I thought I would just check in to see how you're doing. I hope you learned a lot from seeing how acquisitions and payments actually work within Brix for SA Limited. That's all from me for now. See you soon.